Good morning. Welcome to Stock Market Today, Friday, December 18th, 2020. It's your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas for you to consider. It hits your inbox every trading day before the market opens. U.S. equities finished higher on Thursday after putting in a mixed session on Wednesday. All three of the majors, SPYs, Qs, IWM, closing at record highs. Value growth finished in line with each other after value lagged throughout the morning. REITs, materials, and healthcare outperformed. Energy, comm services lagged. Treasuries were weaker. The dollar fell against the majors again. They are burning the dollar at the stake, folks. Gold finished up 1.7%. WTI crude settled up 1.1% at its highest level since February. As we get to the desk this morning, futures are mixed to little changed. U.S. equities are on track for good gains in the last full trading week of 2020. Remember, next week, Friday is Christmas, and the following week is New Year's. So 2 weeks in a row, shortened. Treasuries are mixed with the curve steepening. The dollar is firmer on the major crosses, but still down over 1% on the week, near its lowest level since April 2018. Gold is down 30 bips. WTI crude is down 10 bips to get us going on a Friday that starts off with, well, I think it says it here. They just keep setting records. That's an uptrend, folks. It's an uptrend across the board. It's broad. It's strong. People want to call it a bubble. It's not. Maybe it's the start of one. But when IWM goes nowhere for more than 2 years, when global equities go nowhere for more than 2 years, and they're all just starting to break out now, that's probably not a bubble, right? There's a bubble in the confirmation bias of people looking at bubbles or looking for bubbles. That's what I say. SPY support 360, then 340. Qs 260 is key support. 300 is important in the near term. We talked about this all week, how holding 300 was important for proving that this was not a false breakout. Now, anything can happen, but the odds of it being a false breakout are greatly diminishing. IWM, still the best game in town. Support near 170, then near 160. I know the arguments. Valuations are stretched. Okay. They can remain stretched for a long time. It's a bubble. It's probably not. Price is king. Fundamentals matter. Follow the trends. That's it. Trends are to the upside. Identify good companies in leading areas of the market and own them when they set up for your time frame and your process. All week I've just been thinking about the Peter Lynch quote. More money has been lost anticipating corrections than in the corrections themselves. I think that's apropos right now because the people who are bearish still, there are some out there. That's their pitch. It's a bubble. It's got to turn. They've been wrong for years. Right? They're usually the same people who told you all throughout the summer as the market was working higher. Well, it doesn't count. It's only like the 5 FanMag stocks or the 6 FanMag stocks that are leading. Now they're telling you it's a bubble and it's the Fed and its valuation. That's called shifting your thesis to anchor to your narrative. It's intellectually dishonest. And what I would say is identify the people who are doing that and pay them no mind. Market in a minute. What are we writing about in our note today? Well, SPY, Qs, IWM all close at record levels. That's not a downtrend, folks. Key metrics point to continued risk appetite on the part of investors. FanMag is actually starting to resolve higher. You can read about that in my note. High beta versus low volatility trades at new all-time highs as well. You can read about that in the note. Futures point to a mixed open, as I said today. Major indices, power bar perspective, Dow adds 44 bips, 5-2 bulls to bears. S&P 500, 55 basis points. 136 to 39 bulls to bears there. NASDAQ 65 to the good, 65 basis points. Back to better than 2-1, 17 to 8 bulls to bears there. Small caps outperform once again, up 1.2%, 828 to 109. Bulls to bears. Bonds down tick. REITs had a day, I guess. Relative trend there is awful. There might come a time where it makes sense to look at REITs. There might actually come a time where it makes sense to look at some of the bombed out office and retail REITs. I'm not there yet. I like to be a contrarian sometimes, but the trend has to have shifted, right? So not pick the bottom, but find something that's been underperforming, like energy, right? I was a hater on energy, and then I was watching. Then the trend started to turn. So then you get involved. It's not about calling the bottom, catching that knife. Stock of the day, Qorvo. Semiconductors are strong. There's no two ways about it on an absolute and relative basis. So what we want to do there is look for oversold within an uptrend. You're going to see a lot of uptrends in the semi space. I want oversold within the context of that uptrend, and we have it in Qorvo. You have it in a few other names. I actually could have picked other names. I think Avago or Broadcom, AVGO looks interesting as well. But it wasn't as oversold as Qorvo is. So I wanted to take a look at Qorvo today. QRVO, the ticker symbol, bullish rating, strong trend, strong industry group, above the rising long-term trend line. We know semis are strong. We've been talking about it for a long time. Ribbon at the bottom of the screen where the rating is and has been. We're bullish. We're outperforming. We're oversold with bullish money flow. Leading stock in a leading industry group becomes oversold within the context of its uptrend. That is essentially the crux of how I look for ideas. Leading stocks, leading industry groups become oversold within an uptrend. And then manage risk. You see me do it all the time. I talk about a stock almost every day here on this show. Sometimes they work out. I don't expect to get them all right. I don't. That's why we manage risk. If you read my notes, there's always a metric that says, if the stock goes here, it's wrong. Cut your losses, move on to the next idea. It's okay to be wrong. It's not okay to stay wrong. Sector tracker, move into the major sectors over the last 5 days of trading. Nice to see tech back at the top of the list. Biggest weight in the S&P 500. I actually think tech could be reasserting. We've talked about it. Tech, quote unquote tech, was never really under pressure for the 3 months from September till now. It was mega cap tech. It was the monsters. It was XLK. Right? If you looked at equal weight tech, it was fine. We've done the exercise in my notes. If you looked at small cap tech, it was fine, outperforming. But now tech looks to be potentially getting in gear. So what does that mean for the market? What does it mean when we've had this broadening of participation and now your bigger group, which wasn't really taking part for the past 3 months, gets in gear? Now, for some, it means it's a bubble. For me, it just means the uptrend is likely to continue. And if we get below my key levels, we'll change our view. Discretionary REITs and UTs round out the top 4. Staples, materials, comms, middle of the road. Healthcare and industrials also bullish. Fins and energy bearish. Energy giving some back. Energy's had a monster run off the lows. A little bit of a digestion makes some sense. Hopefully it doesn't morph into something else. But if it does, we'll change views. Open mind always. Strong convictions loosely held. Industry and focus, retail services. And I am going to tell you, I missed this one. I missed it. I should have been louder about it. The way I'm loud about semis, the way I'm loud about other themes, the way I've been loud about materials in the summer, the way I was loud about industrials at the end of the summer. I missed this one. And shame on me. But it happens. Been an absolute monster over the past 6 months. XRT, the retail ETF, outperforming the S&P by 26%. Still has a very strong power bar ratio, 24-7 bulls to bears. Currently ranked number 14 of 21 subsectors. Asbury Motive, ABG, Signet Jewelers, SIG, Penske, PAG, all with very bullish Chaikin Power Gauge ratings. All holdings in a fund that, I mean, it's not even that I missed it. I saw it. I just didn't get loud on it. And so shame on me. Shame on me. Fund has a very bullish rating. Strong trend, strong industry group. I can't believe it. I should have been louder. I apologize, folks. But an uptrend nonetheless. Oversold within the context of an uptrend. Bullish money flow, strongly outperforming. I know a lot of people caught it. It still looks good to me, right? It's still an uptrend. And I think you could still go looking for ideas within the space. There are 24 bulls. I like the idea of companies that are really building out their internet presence, but I should have been louder here next time. All right, yesterday's movers and shakers. Lennar earnings, ACN earnings, send those stocks higher. Housing starts, send Pulte and NVR to the upside. Paycom, no real news. Excuse me there. Loser side of the board, not a lot of news. MPC giving some back with energy, HII in the aerospace and defense. Neutral rated stock down 2%. AT&T caught a downgrade at Morgan Stanley. That stock lower by 2%. OMC, recent call out on my part in one of my notes last week was holding in, doing okay, and then took a 2% hickey yesterday. Still looks compelling to me. There's a personality change in OMC. It's bullish. It's oversold. I think it looks compelling still. So potential opportunity here for a name that I like. CBRE down 2%. Didn't see anything company specific there. It's a sight to behold, folks. Semis on a relative basis. That's an uptrend. The only thing I can really say is that it's extended from its 200-day moving average. A little extended. But RSI of the ratio, holding bullish ranges. And just continuing to grind higher. Now, when semis are outperforming, that's generally bullish for the market. It's generally bullish for tech. I like to pay attention to the rate of outperformance because we kind of went sideways here in January, February, ahead of the COVID bottom. So from in rate of change terms, it started to flag. So that's something I'm working on constantly, Paul. But still an outperformer, right? So I want to look for ideas. Qorvo. Avago. I still call it Avago. I apologize. It's Broadcom. Other themes that I think we're going to see endure through into 2021 are the blockchain. Now, everybody's talking about Bitcoin as they should be. I'm long Bitcoin. I'm happy. I started buying Bitcoin in April. I mean, just dollar cost averaging into it. But remember, there's an underlying technology here called the blockchain. And there are companies who are actively building applications and businesses on the blockchain and based on blockchain technology. BLOK, the Amplified Transformational Data Sharing ETF, it's BLOK is block. Gapped higher, 52-week high, solid uptrend above the 50-day moving average, above the 200-day moving average. In a move confirmed by momentum for a fund that's massively outperforming the S&P. I think you want to drill down here. I think you want to dig into some of these companies and see what they're doing. You'll be surprised some of the companies are. I mean, you'll know some of them, right? But some big tech names in there. I urge you to dig in. I think it's compelling. I think there's going to be opportunity and it's going to be big. The other opportunity is cannabis. Take a look at YOLO, Advisor Shares Pure Cannabis ETF. Right, purely from a technical perspective, what do we see? A run, consolidation, working top side, outperforming, confirmed by momentum above the 50, above the 200. And I'm starting to think about some of the themes that could endure into the new year. And this is some of the stuff that I'm looking at. So it's going to wrap us up for today, folks. It's Friday. Have a great weekend. Head over to ChakinAnalytics.com when you have some time this weekend. Sign up for a free 14-day trial. Get our ratings. Take a look at our stuff. Read my note every day. ChakinAnalytics.com/test drive to sign up for a 14-day trial. You also receive Mark Chaikin's note every Sunday. Be well. Be safe. Have a great weekend before the holidays. We'll be back on Monday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.